Money Mind producer Sona Ramesh is thinking about investing in gold for the first time. But every time she wants to make a purchase, she wonders if it's a good time to buy. Gold prices are at a fresh record high after rising almost 27% in 2024. But what's pushing prices up? And what could bring them down?
So I'm thinking of investing in gold, but I don't quite know where to start. So I'm going to ask the experts. Guys, I've been thinking of investing in gold. The price keeps getting higher every time I look at it. Have I missed the boat?
2024 has been a tremendous year for gold. In fact, gold hit its all-time high for 40 times in total. So the large chunk of the demand actually comes from the jewelry fabrication. Gold is a safe haven asset, right? So it tends to thrive when the market is uncertain about its future. The market is fearful of geopolitical tensions. Secondly, a major driver for gold prices is actually the central bank purchasing. The central banks are trying to reduce the dependency on the US dollar. Most recently, due to the announcement of Trump's hostile tariffs. So there's this anxiousness in the investors worldwide. So to answer your question, you have not missed the boat.
What kind of returns can I expect with gold versus if I just put money in the market, perhaps in the S&P 500?
From the way that we see it, gold investments versus the S&P 500 stock market index, as an example, we don't see it as an either-or question. The stock market, people invest in it for the long-term growth, for the compounding effect of, as well as receive dividends. Gold, on the other hand, it is more of like a hedge against uncertainty. It's a good store of value.
Taking a longer-term view, over half a century, gold's returns were less than the S&P 500. From 2003 through 2023, gold returned almost 9% annually, slightly outperforming the S&P 500's 8.4 annual return, excluding dividends. When you add in dividends, the S&P 500 averaged over 10% annually. But in just the first 2 months of this year, bullion has surged over 10%.
Our firm believes, Sextra Global Advisors believe that gold price could hit 3,100 US per ounce this year. And we are quite confident.
I think the chatters have really been whether gold will actually touch that $3,000 psychological level. We are near. I believe that we may be able to reach that milestone this year.
So do others on Wall Street. But are there risks to the current rally?
There's more tailwinds than headwinds. The first headwind will be if central banks become net sellers of gold. The other reason could be that the US inflation rises to a certain level that the Fed needs to increase interest rate by a lot. Not only gold, but other asset classes will get hit as well.
Experts say any dips could be a buying opportunity. A dip or retracement and support above 2,790 US dollars would be an opportunity to enter a long trade.
We don't eliminate the possibility of some kind of profit taking when we hit this ballpark, $3,000. But in the alternate scenario where if prices did manage to breach past this $3,000 and it's able to hold its support above, we would see it consolidating and having, just gathering some steam before it takes off in the future again. But once again, as an investor, I think a very popular game plan is to dollar cost average, which means that you gradually put in a fixed amount of investment every month. So the price that you're investing in is actually the average price.
So these days, there are so many different ways to invest in gold. What are the other options?
We see a lot of people having a lot of comfort in buying physical gold, or physical silver, or physical metal of any aspect. The reason behind it is because it's yours. And you can have it for a long time, you can pass it on to the next generation.
I agree, but let's say if you're looking to just invest, one of the easiest and most convenient way is through investing in a gold ETF. The barrier of entry is very low. You can just start investing in the gold ETF, which is a few $100s. Secondly, it is also convenient in the way that you could execute your buy or sell trades through a platform and at a very low cost. And thirdly, you also do not have to worry about physically storing the gold.
ETFs are low cost and may provide a lower barrier to entry, but they still carry risks.
This is a pretty extreme scenario where at times of crisis, let's say if you don't get access to your trading platform, or you actually have a piece of physical gold, but investing in gold on paper, so essentially there is still a risk on counterparty risk. You're relying on a central platform, you're relying on some digital network, you're relying on a bank to maybe execute your liquidation trade at time of need.
So Reid, what's the price range of various types of gold you can buy in Singapore?
You have the 1 gram gold bar, which is probably around $160 Singapore dollars. We have 1 ounce gold coins, they're about 31 grams, and they cost probably around 4,000 and above. And they are hovering around the premium of probably 5% to maybe 12%, depending on which coin you're choosing. So the snakes here is quite an important coin. That's going for about probably 4,300 thereabouts. And of course, the infamous 1 kilo gold bar here, they can go all the way up to 130,000 Singapore dollars. So they are a bit on the pricey side, but it is a good looking bar. Would you like to have a hold?
I would love to. It's $130,000 right there, and it feels really solid.
Yeah, it feels good, right?
What about storage costs? Because you just can't be keeping these at home.
It depends on what you're storing, whether it's gold, silver, platinum, and each one has its own category and each one has its own tier pricing in each category of value. So for example, if you have approximately USD 75,000 worth of gold, in a year we charge about 0.37%, so that makes it to about 76 cents USD per day.
At the end of the day, the value comes when you sell it off. So who do I sell it to, and what's the process like?
Essentially, you have to do is actually approach any bullion stores of your liking, and then what they'll do is they test the items that you have using a metal verifier machine, and then after that you'll receive a quotation from them.
Sona could take one of two positions when buying gold: as a trader or an investor.
Generally, long-term investors want to look for a longer-term capital appreciation of gold prices. Whereas for traders, they are trying to do is really to tap on any form of short-term volatility in terms of gold prices to try to reap some quick profits.
When it comes to buying gold, Sona has decided to take a longer-term view as an investor. She does not want to be caught up in the short-term volatility that traders worry about.
So I've learned that with so much uncertainty going on, the appeal of gold really lies in that safety aspect. To that extent, having something physical, tangible really does appeal to me. But this is way too expensive for now, so I may have to start with something smaller.